Hey, what's up everyone? So this is just a bonus clip from an analysis I did earlier on today during our free Zoom sessions, which we have every Monday, Wednesday, and Friday at 10:30 a.m. Kenyan time. So I just saw that there was a lot of nuggets that shared over here, especially in the markets, and a few different touch points. We talked about internships a bit, and also just other few stuff that I think are important that I really wanted to share in today's post. So I hope you enjoyed the analysis. See you next time. And I hope you can all hear me. So what do we have here? This is gold. Okay. So gold top-down analysis, breaking a very strong barrier. You can see we've been very bullish on this one. This was just a long-term correction over here. We expect a lot of bullish momentum to continue to the upside to cause new highs. Okay, and such things, when they start happening on gold, it is very rare to get a deep pullback. What normally happens, just like what you got over here, market just soared all the way higher and higher, because many people are jumping into that trade, causing it to explode even more. So corrections are not really as much. Okay, so if you look at the weekly chart, some trend line over here I have that is currently being broken, depending on how you put it. I've just kept this one looking at the bodies, touching the bodies of this. Okay, touching the bodies of this, but sometimes you can also use the wick. If you're using the wicks, then this one is yet to be broken. I've used the wick on my daily chart. We'll break that down. But long term, you can see first touch, second touch, and third touch over here. A lot of momentum into the upside. I go down to the daily chart. So just a top-down analysis. Let me put this on full screen. So just looking at the top-down analysis, this is the channel that we have been following for the longest time. Okay, this flag formation. So impulse, a flag formation. You've seen that first touch here, second touch here, third touch here, causing a double bottom. This was the last bearish move on this one, as we expected, which was supported by the 61.8 Fibonacci level. You can see this 61. So this was the whole impulse, corrected 61.8, market held, double bottom, third trend line bounce 61.8. There was a lot of bullish indication on that one, and now we've seen market breaking up above the 1750 barrier. We talked about that on our Instagram page, posting a post that market was above the 1750 mark yet again. We expect a lot of bullish run on this one. Okay, if I go down the 4-hour chart just to look at this pattern that I'm watching currently, we sort of have a flat channel-like formation. Okay, so quite smooth, quite clean. Okay, you're seeing this impulse, correction, impulse, sideways correction. Not all corrections are pullbacks, so you can have sideways correction, another bounce over here. You can see this first touch, second touch, third touch, clear and precise. And yesterday we got this strong break. I'm always looking for these strong breaks when it comes to the breaking key levels. This was breaking the 1800 mark. Okay, so around $17.95 and $1,800 market hadn't broken it for some time. You can see this touch over here, some resistance here, double resistance here. This was just a lot of noise. Okay, so this was a candlestick that just got many people to panic out. This one over here, this was during some news that came out. This is when Yellen talked about interest rates. I think that was on Tuesday or Wednesday, one of the two, and market quickly dropped. We didn't get that continuation. We didn't get that follow through. Okay, you normally want to see a follow through of such patterns. Once they drop like that, you want to see that follow through. There's this support down here. If we got that follow through of market coming strongly and breaking it, then that would be a very bearish indication, but we didn't get that. You can see this candlestick over here, this 4-hour candlestick that engulfed all these other candlesticks over here during this consolidation, is when was the indication for this pump to the upside. So sorry about that. So we got that indication over there. That's what I'm talking about, that pin bar formation engulfing that. That was the indication, and market has really skyrocketed from that level. So expect market to remain above the $1,800 mark. What usually happens when you in gold and such pairs, just a tip I can give you, normally when we break the $100 mark, so 1800, 1700, 1900, what normally happens, there's normally a quick, if it's a clear breakthrough, what we normally see is a quick move 150 pips up. So it's easy to see once market breaks like a level of $1,800 mark, it's quickly to rise to the 1815 and 1825 before any correction. What normally happens also 1900, if you go back and just look using your data, for example, let's look at the 1700 mark. So where was that? That was around here. So if you just look at this breakout, okay, where was it? 1700 over here. So if you look at that, strong break, it's easily, you can see market shot all the way up to the 1715 around this before we got some correction, and then quickly to the $17.25 mark. That normally happens. You can do a lot of back testing on that. Go looking back in history on that, okay? Also on the opposite side, when we break on the lower side, let's say 1700 to the downside, a strong breakout, it's easy to see market going to the 150 pips below that. So to the 1675 to the downside and such, okay? So that's something the gold market has been doing for years. I think I got that information from Jesse Livermore's book, okay? Reminiscing of a stock operator. He talked about that when it comes to gold. That's why it's really important to deeply understand different pairs deeply on their own. If you understand things like oil on their own, it's things on supply and demand. When you go to gold, it's normally a hedge commodity where people run to when there's a lot of uncertainty or when the dollar is really being printed out a lot, as it's happening at the moment. So that's what is happening on gold. I expect this market to continue at least to touch this trend line over here. So it's easily, you can see market quickly. I was telling the people on my Discord yesterday, a rush to 1825 can be easily seen. If market continues with this bullish pattern, you can see a quick touch of the 1840, 1845 level, marking the end of this pattern, which is in line, if I go to the 8-hour chart, which is in line with this this level over here, this level, getting that third touch, okay? So pay attention to that. That's what we have of gold. Let's go to something else. Aussie dollar. Let me break down the Aussie dollar, as I said, what I was looking for, okay? So let's make this full screen. So I've been talking about Aussie dollar for quite some time. I've been bullish on this one because we've been having a bullish trend, okay? So you want to maintain. Okay, personally, I like maintaining, depending on your approach in the markets, being in the direction of the trend. Personally, my direction of the trend is to the upside. So you can see this first touch, second touch, third touch of the 8-hour chart are quite clear, quite precise, and you're seeing market forming higher highs, higher lows, higher highs, higher lows. So the corrections haven't really been deep, okay? So I haven't gotten that crazy correction to the downside. Like over here, we had a 30, if I go the 1-day chart, so just a 38.2 Fibonacci correction. Okay, so if you look at this, if you use Fibonacci's, this was the 38.2 Fibonacci correction, and then this impulse, and then another 38.2 Fibonacci correction yet again. So if I go back to that 8-hour chart, what I expect, or before I go there, let's look at this 1-day chart. So what I'm watching is if we get a break of this level, okay? I'm watching if we get a strong break of this level. Mark my words, okay? If we get a strong break of this level, just as we had over here, okay, we'll be yet to see a very, very strong rally, because if we close and break above, especially on the daily chart, if we close above this level, look at that resistance level, look at that first touch. It's a very strong, significant level. So looking for a break above it, I'd rather bet on the direction of the trend instead of waiting for a move to the downside. If you get that break and close above, then I'll be heavily scaling into my position, okay? Targeting higher sides, because my ultimate target is around the 0.82 level, 0.83 to the upside, okay, before any significant correction. So going back to that 8-hour chart, what I'm paying attention to now is this consolidation over here. So we've been having massive sideways movement. I'll show you better seen on the 4-hour chart, but I'm watching these levels, okay? So these levels, let me just make this visible on the 8-hour. So duplicate this. So this is what I'm watching. So this current level is what I'm currently watching. I got an entry, I think I'll show you that on the 1-hour chart. I got an entry after this rejection over here. You see this rejection to the downside? This was also during that news time. Okay, so a rejection over here, quick touch of 61.8 Fibonacci, and a quick move back up, closing above this level. Okay, so that's when I got my entry and I took that buy position. Okay, if I go to a 4-hour chart, So I took an entry above. So if you see this 4-hour chart, it's much more clearer. And remember, I talked about this a few weeks ago, quite a lot. I was waiting for this third trendline bounce. Look at it on the 1-hour chart. I remember telling people, okay, I haven't drawn it there, but I was waiting for this third trendline bounce. You see this first touch, second touch, third touch, in line with the 61.8, and also in line with this support level that the market wasn't able to break below and close below. So immediately after that rejection, got an entry at that level, and I'm riding that way higher past this level. So I'll be watching for this significant resistance level to be broken. If we get that break, my friends, next week I'll be very long. I'll break even on this one and scale in on a bit more after this breakout to the upside. Yeah guys, so that's all I have for you today. If you want to watch this full analysis, join our Zoom sessions and you'll be sure to be getting the full market breakdown that we normally do every Monday, Wednesday and Friday at 10:30 a.m. Kenyan time. So the next clip you're going to watch is just a short clip. We talked about our IG page being hacked and also our internship program. I just touched a bit on it. I will touch a bit more on the next weeks to come. So that's all we'll have for today. Have a wonderful weekend. So we're still on. So if you follow our IG page, I was telling people yesterday we got hacked. So we don't have an IG page at the moment for Financial Hub. So we're trying to sort it out, but we got hacked and we're trying to get it back and running. So if you've contacted us, the apologies. Hopefully we'll be up early. So just to talk about the internship program, which I think I'll talk about it nicely on Monday, or even Ken will talk about it because he's in charge of it. We're just looking for people who can do proper chart analysis, write articles and such stuff, because it's the way we've learned how to become better traders. If we weren't doing analysis, weren't doing such stuff, I don't think we'd be as good as we are now. So we are looking for such people who we can mentor and people who can do the same thing, analyze the market and do quite some work in this financial industry. So I don't have anything deep to talk about it. We're just looking for people. If you can submit your proposals on our email, which we shared, please go ahead. But we'll talk more about it on Monday when we have more time. I'll be sure to tell Ken to talk more about it.